So thank you for joining us tonight. Let's go through. First thing I want to do is basically share with you a little TradeStation tip. I just posted a video on YouTube about it, and what it is basically is just how to locate a day of the week. So for your backtesting, obviously one of the things we need to do when we're backtesting is we need to find a specific date that we want to test. So the easiest way to do that, thanks to James, thanks for the tip James too, is to go view data window. So you get your data window up. On the data window below the top panel there you'll see save, printer, then you've got an icon called show all. So just click on show all and that'll bring up the dates that that the system has been tracking or that have appeared in the window. Now what we want to do is go to the 1st of September, because the 1st of September is the last date that I tested up to. So we'll just jump on to the 1st of September here, and we just need to power this down a little bit, the 2 AM session. So let's grab the 1st September, click on that, and that'll take you to, there's 2, or there's 3 o'clock, that's a bit closer, there's 2 if we go there. So that'll take us to the 1st of September, so we can take that back to just our normal, we'll minimize that, our normal screen, click on show all, and you'll see there's the charts, 1st of September, and there's our start time, 2 AM. So what I'm going to do today is take you through testing from the 1st of September. We'll go and do a couple of trades, and we'll basically get a bit of a feel. I'm going to talk about the continuation trade as well. So I'll take you through a couple of days and we'll go through the spreadsheet just for a bit of a recap too. So here's our first setup. Now the first thing we want to do when we come into the trading day is just find out what's happening. I'll always like to look back, probably back to about the end of the US session, just to get a feel for where the market is. And that's as we go through the course and we start doing our live trading, you'll start to hear me talk about market structure and finding out where support and resistance is, or where they are, I should say. And that's one of the things that we're going to do a little bit of. We're going to find out where support and resistance are, particularly on the higher time frames. So maybe the 150 or the 450 tick chart, and you'll see me do that tonight in the room. But let's have a look here. So we've had, there's the high. Now this is our first trade. Our first trade sets up at 311. So we just marked that on our chart. Trade 1 sets up at 311, and the reason why it sets up at 311 is because that's when price breaks that support line. Now the trade, the low on that candle there, and I'll widen this out so we can get a really good visual of that. Now remember, if we want to grab the chart, we just need to hit background dragging, and that should allow us to just get the hand up and we can just pull that across. So there's our low for that is at 88, and I've just got to move that over a little bit so I can see it. I might make that a little bit wider, a bit bigger, because I'm just struggling to see those numbers. Oh, that's better. That's definitely big enough. So there we go. So our low there is 88.86. So that's our entry point. Entry points there, and what we basically want to use, we've got our stop. Our stop is sitting right up there, so that's not affected on the first trade. But we're measuring how far the trade goes against us. So we put our handy little drawing tool there, and we mark that up on the chart there, and that tells us exactly how far the trade goes against us. And the trade runs against us, and let's have a look at how far. It's about 16 points, I think. Yeah. So, and then basically we've got the trade, the furthest the trade goes in our favour, which is down to here, and that's 51 points. So already we can see, right, well, on this trade entry here at 356, we didn't get stopped out because it didn't break above that trailing stop, which is our red dot, so that's okay. It sets up after 2 o'clock, great, and it trades all the way down here and gets taken out around about here. So there's our trade gets taken out. Now entry point was 88, which was the low, 88.86. So we'll mark that up as an entry, 88.86, and our out point or our stop, just mark this up, 2 points above there, which is 65. So 67 gets us out. Alright, so that's our first trade. Everybody concur with that first trade setup. No surprises there. Fairly easy setup. That was a pretty easy one, obviously, to test. So really, what we're wanting to do is we're wanting to just see where there's any potential anomalies or any different kind of setups that we might see when we're trading. You'll see them because straight away we get what we call a second attempt. Now what's happened here is we've got momentum, we lose momentum when we stop out, and then we get momentum back again. So this is what we call the old second attempt trade. Now you can actually get a third attempt trade, so I call these a second attempt, and this is where we get triggered into the market. And unfortunately in this situation, oh no, it doesn't stop out. Let's just pull this over. We actually get a bit more of a run here. So we get another bit of a flurry down to about here, which is 19 points. We take a little bit of heat on the trade because it goes against us back to about that point there, which is around about 22, and then we eventually get stopped out over here. So there's our next trade. Now, so that trade there is a plus 19. Our entry, we'll go through an entry, the low is at 42, so 88.42 is our entry, 88.42, and we get knocked out at, and it looks like that's going to be a losing trade. Even though it went a fair way in our favour, we get knocked out at 54, so negative 12 points. 88.54 loser, which is basically negative 12. Oh, the joy. So this is basically why we're testing the target. So what I'm going to do quickly now is take you to the sheet that we're testing, our spreadsheet, because I want to go through exactly what happened on this day and with these trades. So the 1st of September to 11, and we've got two trades. So just recapping, and we'll just grab our first trade. So I'll just write these details down because we don't want to be flicking back and forth between the chart. So our first trade entry was there at 88.86. So 88.86, it's a short, and we get knocked out down here at 88.67. So the trade goes against us 19 points to 16 points, and it goes in our favour 51. So for 51 and against 16. So let's go and put that data in to our trade, to our spreadsheet here. So basically our session start time is 3:11. Long or short, it's obviously a short on the first trade, 88.86 and 88.67. So that was our first trade, and it went against this 19.0.19, so that keeps consistency there. Now it was a short. Was it a second attempt or just an initial trade? It was just an initial trade. Now one thing we want to know basically up here as we start filling this out is, was it a second attempt? No, it wasn't. Was it a third attempt? No. Did it challenge a key level? So the question here is, did it actually go through a key level? We can quickly find that out because we've said as part of the backtesting that unless it actually sets up 10 points either side of a key level. Now is 88.86 10 points either side of a key level? No, it's not. It's 14 points away from the key level. So we've cleared that area. Now when we put in our data, we know that it went. Now these columns here, Ron, these are what we call our fixed targets. So I put these in because what I want to know and what we want to know as traders is we want to know what we're doing at the moment is we're doing something called, as we've spoken about, trailing the strategy. So what trailing the strategy means is that and a lot of people, there's two schools of thought about trailing. One is that ideally you're going to, over time, if you take enough trades, you're going to do much better in a trailing scenario, because you're using that common trading concept or axiom that you let your winners run, or you let your trades run. Now, the quickest thing to obviously undermine your trading system performance is to cut your profits short. So you're not going to get huge winning days every day, and you're not going to get huge profitable days every day, but over time you will become more profitable letting in the trades run and trail. Now, what will happen is, but the other thing too is that going for a fixed target will give you more profit in the short term, and it'll make you feel better if that's what you need to do. If you want trades that are going to give you quicker profit, but that it won't outperform the longer term trailing strategy. So what we're doing here is we're just comparing the two. We're comparing the trailing strategy, where we don't actually have a fixed target. We just let the market take us out based on our trailing stop. And then we're going to compare it with a 10-point target, a 14-point target, a 20-point target, a 25-point target, and a 30-point target. And we're going to see which one of these targets gets hit the most regularly on our test data sample. So we're testing 300 trades. Well, over 300 trades, you are going to have a stellar idea as to what is the most profitable way to trade this as far as a target or a trail. Now, you're going to get a clear indication of what is the most profitable way. And I don't want to preempt anything, but obviously today, in the trade we've just recorded, it went 10 points, it went 14, because this is what we have to put in on the right hand side. It definitely went 20 points, so it would have hit a 20-point target, it would have hit a 25-point target, it would have hit a 30-point target. So all of those targets would have been hit. However, because we're trailing, we only get 19 points. So for the remaining columns, we just use whatever's in G, which is 19, which is the trail. So we stick that in there. Now the other thing we're testing here as part of this process is we're testing what our circuit breaker is. So obviously the first trade of the day, we're going to basically take it on every different scenario. But if our next trade is a loser, then we aren't going to put another trade in here, because when we say one win, one loser, that means we can only take one trade. That's it. No more. When we say one loser, if we have a losing trade in this sequence of trades, then we can't take another trade. So you can see there's a loser, we didn't take another one. There's two winners, we kept trading. A loser, we stopped. A loser, we stopped. And I'll just check to make sure that's not on the same date. No, that's okay. It's always good to just get a day in between your days, so at least you can see when you're doing your analysis that you've got those lined up properly. So that's correct. Yep, one loser. So you can see here, unfortunately, the first trade of the day was a loser, and that stopped us from taking another trade. If we get a winner, we keep trading. And so you can see that if we get two losers, we're finished. 3 losers, we're finished. But if we keep winning, because what I want you to do is I want you to think about your trading session as, say it's a 2-hour block or an hour block. If you are winning and your system is giving you, why would you stop if your system is giving you winners? And there will be days this will happen to you, absolutely guaranteed. There are two things that are guaranteed in trading. You will have a great winning day and you'll have a great losing day. So what do you think we want to do on a great winning day? If we're having an absolute cracking day and everything's going well for us, the market's on fire, we're just every trade we place we're making money on. The moon, the stars, and the heavens have aligned and everything's going really well for us. What are we going to do if we're having one of those days? Is that the type of day where we want to keep trading, or do we want to stick to our two winners, 2 losers, and done? What's your feeling on that? What do you think you should be doing if everything's running well for you on a particular day. And this is why we test. This is exactly the reason why we test and we do the back testing, because you will know beyond any shadow of a doubt at the end of this testing what is the most appropriate way for you to manage your session. Because this area to the right of the chart, stick to your plan. This area to the right of your chart is all about your trading plan. So if your trading plan, if you go through and you work out that every trade you log, if you work out based on your back testing that you want to be this guy here, you want to be with this guy here that says, right, well, if I have 2 losers, I'm going to finish, because I don't like having more than 2 losing trades. But if I keep having winning trades, I'm going to keep trading for the time that I'm supposed to be trading. So if my session time is, say, 2 a.m. to 5 a.m., that's my session time, that's my trading time. That means that if I have 2 losers in that time, I'm finished. But if I have a winner and then a winner and then a winner, and I keep having winners, and it's still, say, 4 o'clock, am I going to keep trading? Yeah, definitely I'm going to keep trading, because that's my plan. That's what I've tested. I've tested